Good afternoon, everybody. Thanks for joining us today for this seminar hosted by ACE Scotland. I'm Stephen Monroe. I'm the interim chair for the ACE Scotland committee, also a partner with Alan Gordon. Today's event forms part of the ACE Insight webinar series, which will cover the topic of risk, professional indemnity insurance and contracts post-COVID. We're lucky to be joined today with experts from ACE affiliates, Brunel Professions and Brodie's LLP. They will explore tangible issues, for example, how spending time on the pitch will reduce your insurance premium and what the existing obligations are following the pandemic. At the end, there'll be a question and answer session. And there'll be a slide that will explain how to send those through. Best experience just for you is through headphones, which will cut out background noise. Ask questions, go to the questions control panel. It's generally sidebar to the right of your screen. We'll try and answer as many as possible, but don't worry, we'll also answer any others we haven't the time to cover after the webinar. Don't worry if you miss anything. We'll be uploading this to the website next few days, and again, you'll be able to listen to this again, or indeed share it with your colleagues if that's what you wish to do. First of all, I'd like to welcome Brian Graham, who's Associate Director at Brunel Professions. Brian will give us his insights into the broker's viewpoint of where things are. So Brian, over to you.
Thank you very much, Stephen. Appreciate everybody attending today. As Stephen said, I'm an Associate Director at Brunel Professions. We're an independent PI specialist broker. We're also on the panel for the ACE. So I just want to have a quick chat today about the unfortunate morbid situation of the professional indemnity insurance market. So my first slide today is in connection with why the market has hardened so considerably over the last couple of years. I put a little snapshot on there just to sort of show what happens between what we call soft market conditions and where we are now in hard market conditions. So over the past 15 years, the professional indemnity market has operated in what we refer to as soft market. By this, we mean that rates were reducing year on year, and there was an abundance of capacity in the market with aggressive quoting aimed at winning and retaining business. So basically, there was loads of insurers, managing general agents, capacity providers coming out of Lloyd's of London, all fighting, scrambling over the same risks and pieces of business. And what this automatically does is, as per the slide, it means that premiums are lowered automatically. The coverage is very vast and broad, because insurers and competitors alike are wanting to win business left, right and centre. So generally speaking, the renewal process was relatively straightforward during the soft market, and there was a wide range of insurers, as I said, that we could choose from. Unfortunately, in the last 18 months or so, we have seen significant hardening of the PI market. This was basically followed by the Lloyd's thematic review. This was also known as the Decile 10 review. So basically, Lloyd's of London in 2017 suffered their worst ever loss on record, with non-US professional indemnity insurance actually being the second worst performing class of insurance. So what Lloyd's did was put a number of syndicates under the spotlight and asked them to prepare plans to restore their PI books to profitability. And those that could not demonstrate this were withdrawn from writing PI altogether. This resulted in a number of syndicates exiting the PI market, leading to a reduction in PI capacity. So also insurers out there, your composite markets, such as your high street insurers, RSAs, the world, Zurichs, AIGs, they also followed suit with Lloyd's of London, and said to themselves, well, we've not been making money on professional indemnity insurance either. So everybody basically reviewed their appetites, reviewed how they underwrite professional indemnity insurance. And what we see in this day and age is a lot of insurers only want to write what's known as a subscription basis. So for example, if you've got a £10 million professional indemnity programme, one insurer might want to only write the first 2 million on a 50% basis, only giving them 50% of the liability. You then need to get another insurer to actually fill up that 2 million. Then you would need to get excess layer insurers to fill up the 10 million programme. So, you know, a couple of years ago, you might only had 2 insurers on a 10 million programme, where in this day and age, you might have up to, you know, half a dozen to 10 insurers. It's commonly believed that the Grenfell tragedy in 2017 caused the PI market to harden. This is not really true. It is all to do with unsustainable pricing and unprofitability of insurers over the last 15 years. However, the Grenfell tragedy has unfortunately had a massive effect on the construction PI market in respect more of the cover that's being provided. I'm sure some of the listeners today may have either been through a renewal process recently or are about to go through a renewal process and might see restrictive language on their policies in respect of combustibility cladding exclusions, fire safety exclusions and the like, where this is becoming more and more common across the marketplace. So, and unfortunately, the COVID-19 pandemic is also playing a major part in the hardening of the PI market, but also, in my opinion anyway, hardening of the entire insurance market, with insurers totally uncertain as to how much COVID-19 is going to cost them in respect of claims. You know, for example, Lloyd's of London estimated a £3.5 billion loss in respect of COVID-19. Now, this might not be related to professional indemnity insurance, but other lines of insurance, such as travel insurance claims, for example, potentially business interruption and stuff like that. So, yeah, the market is unfortunately not in a great state of play at the moment. However, you know, if you work with the correct broker who has got the experience and expertise in professional indemnity insurance, who can guide you and assist you throughout the renewal process. So can we move on to the next slide, please? So the renewal process, I thought was pretty apt to put a clock on there. Reason being is time is very, very important. So starting your renewal process as early as you possibly can is very important for a number of reasons. Obviously, with the changes that we've seen in the market, the number of underwriters and insurers have reduced quite a lot. Therefore, you know, a couple of years ago, we might have had 20, 25 insurers who all wanted to write the same piece of business. Now there's a smaller pool of insurers whose appetites might be that we can approach them with your particular risk. So starting early is very, very important. Also, put together a robust, comprehensive submission is extremely important, and you can work closely with your brokers on how to actually achieve that. But I'll just go through some information that might be of help and use when you do come to your renewal process. So obviously the proposal form is the key part of the renewal submission. However, it only provides the underwriter with certain information about your risk. So additional information to support some of the answers within the proposal form or an appendix is really, really useful. Also, what we're asking our clients to do at the moment is to provide a covering letter on the company letterhead. Now, this would contain such things as risk management, your accreditations, how you actually go through recruitment processes, all these kind of things that might help the underwriters see you as a quality risk and to underwrite your risk accordingly. We've found this invaluable, to be completely honest, when negotiating renewals, because underwriters are being so inundated with inquiries at the moment. If they see one which is just a proposal form, but then they look at another submission which is very comprehensive, there's been time taken to create it, they will look at that submission far quicker than they will look at just the proposal form. Accompanying the proposal form, you'd be asked to complete a construction questionnaire. This will cover hot topic areas in the PI market at the moment in the construction industry, such as basements, swimming pools, and also cladding and fire safety, which I covered a little bit earlier, post Grenfell. You will also potentially be asked now, due to the coronavirus pandemic, to complete a COVID-19 questionnaire. A lot of insurers are now asking for information on how the insured has managed their business throughout the lockdown and what procedures have been put in place. And this is all about obviously the financial state of the business, etc. So a lot of insurers are asking for similar questionnaires to be completed in respect to COVID-19. And yeah, as I said, any additional risk management information which will be contained within that covering letter that I just advised you of. In addition to not just premium increases driven by the hard market, insurers are also applying a number of other punitive amendments for renewal. This might include coverage changes in general. We are seeing some insurers who were always quoting any one claim limits of indemnity or each and every claim, reducing that to an aggregated limit of indemnity. So what that means is you don't have 10 million, any one claim limit of indemnity. It's an aggregated limit across the period of insurance. So you could have hypothetically 11 £1 million claims. However, only 10 of them would actually be covered by the insurance policy if it was on an aggregated basis. I'm not saying that this is market standard, but we are seeing some insurers looking to restrict cover to an aggregated basis. The policy excess, not just potentially increasing, but also might be applicable to defence costs as well moving forward, or cost inclusive might be the language. So again, before any one claim and each and every claim excesses with defence costs in addition were very much the market standard. Some insurers again are applying this to costs as well. So, for example, if you had a £1 million claim, but there was £100,000 defence costs, then this would be included within the excess, where before you wouldn't pay the excess on defence costs if, for example, a claim is defended successfully. We're also seeing, as I said before, limits of indemnity being reduced, as we're seeing insurers reducing their capacity. And also, if there is an aggregated limit of indemnity being quoted, your broker should be trying to negotiate what is known as unlimited round-the-clock reinstatements. So what that means is, if your programme is exhausted, so if you have a number of claims during a period of insurance, it goes to the top end of the limit of indemnity, it would be reinstated back to the start, and then you would have the same programme in place again. So that's some of the changes that we're actually seeing insurers adopt throughout the renewal. And I just wanted to touch on something that the Royal Institute of Chartered Surveyors have undertaken this year. So basically, as of the 1st of May 2020, the RICS have amended their minimum requirements. And this is all off the back of the hardening of the market, insurers adopting aggregated limits of indemnity, applying fire safety exclusions. So what the RICS are now advising their members is that the minimum limit of indemnity before was on an any one claim basis. However, insurers can now offer an aggregated limit with unlimited reinstatements. The excess can now be applicable to defence costs and expenses. And finally, insurers can now apply their own fire safety exclusion. The reason I wanted to highlight this today was because just to sort of show how the market has changed so significantly over the last 18 months or so, and RICS have been inundated with inquiries from their members to provide dispensation for quotations that are basically on these bases, including fire safety exclusions that are being applied by insurers. So Something just to be wary of about the renewal process if you're coming up for that soon. Your broker should really be contacting you. I would suggest at least 2 or 3 months prior to the renewal date to start the process, getting all this information gathered. And it really is vitally important that you give your brokers as much time as possible in the market because of A, the state of the market in general, B, the number of inquiries that underwriters are seeing daily are increasing all the time. So things are usually run right to the wire with service levels being affected due to the number of inquiries insurers are seeing. So as I said, vitally important, and please bear that in mind if you've got a renewal coming up shortly. Slide, please. So the future, just to try and put a bit of a positive slant on this, it's difficult to say how long the hard market will last for. Typically, the last hard market happened almost the day after 9/11, where the insurance market, due to the world economy going pop, the insurance market immediately hardened. That lasted for about 2 to 3 years. And that's when I started in the insurance industry, just at the back end of the last hard market. But the soft market lasted for over 15 years, or around about 15 years. So the cyclical arrangement of the PI market suggests that the soft market conditions are far longer and more prolonged than the hard market. So that's one positive that I'd like to put on the end of this quite morbid subject, the PI market. So yeah, hopefully the market will soften over time. As I said, I personally believe before COVID, we were right at the peak of the hard market. But now I think COVID is going to prolong things a little bit longer than we first anticipated. However, one day the market will soften again. We'll see rates reducing, we'll see coverage increasing, we'll see any one claim limits being market standard again. So I know that you guys have probably been through quite difficult times with your PI renewals recently. But as I said, I think that these days won't last forever. And you know, hopefully over the next year or two, we'll start to see insurers relaxing their stance, more capacity coming out of Lloyd's of London, and then we'll start to see rates fall and coverage increase, etc. So that is all I've got to say at the moment. I said more than happy to answer any questions at the end of the webinar. So thanks for your time today, and if you've got any other questions, you can contact me directly as well. Many thanks. Bye-bye.
Thanks, Brian. Thanks very much for your presentation. Very insightful. I'm sure we'd all agree. Next up, I'm going to hand over to Manus Quigg, who's a partner with Brodie's, and he'll give us the legal perspective, I suppose. So over to you, Manus.
Okay, thank you very much. Next slide, please. Don't mind. And the one after that. Okay. What is today's talk about? It's a sort of it's a bit of my thoughts on the implications of COVID on consultants as I see it, both in terms of existing issues and potential claims down the line. That's probably the best way to summarize it. And we started out, if we go back to March 2020, whenever all of this started, it started on the 25th of March when the Scottish Government issued its guidance to stay at home unless it was essential works. We then saw a period of instability where the Scottish Government and the UK Government had was offering different guidance to the industries, so that in England, probably around about April time, a lot of the construction sites will be opened again fairly quickly. But in Scotland, pretty much as a country, we have actually stayed at home, and most sites did stay shut. The next event was the 21st of April, and that was whenever Regulation 4 of the coronavirus regulation was amended. And that was amended. What they did was they changed the definition of premises in that to apply to any building or structure in any land. And if you read the regulations, you'll see that that section really was written around shops. and reasons for being in shops. So it's a bit bizarre. You'll enjoy if you read Regulation 8, I think from memory, where it talks about excuses for non-compliance and such as attending funerals and things like that. So it's okay to not distance or to do not apply the 2-meter social distancing rule on a building site if you're en route to your funeral. So it's kind of bizarre. It doesn't really work, but in terms of the justifications for non-compliance. But fundamentally, there is an obligation, whether you're on a building, a structure, or land, to apply 2-meter social distancing. We thought at the time, we were constantly getting asked, is that a change in law? And the answer is yes, it is, but it doesn't really justify you being off-site if you didn't have a contractual right to be off-site at that point in time. Because if your reason for being off-site was because of COVID, you could never really return. The 11th of June, we saw the soft start on site, phase 2, and then the 22nd of June was the steady start, but with social distancing and no PPE. And that was really whenever most construction sites reopened on that date or around that date, with the 15th of July going to steady state and social distancing and all PPE. So why is all of that relevant? It's relevant because that is the history, the key points against which entitlement of all parties in the construction contracts, whether it be contractors or consultants, will be assessed. Next slide, please. Next slide. Yeah, thank you. So what I've done is this is again just my thoughts. So there's 2 ways in which COVID will impact upon consultants: directly in terms of the performance of your own services, and secondly in the role of contract administration. And it's the latter that probably poses the most risk, and it's the latter that hasn't really become apparent just yet. Design services. It's interesting that we've found that in our experience, most designers use the lockdown period to catch up on projects where design perhaps had fallen behind before. So to some extent, there wasn't really delays to projects in terms of your appointment. We've seen, well, I wrote down few COVID-related disputes involving consultants. In reality is I haven't really seen any. I don't know whether those are yet to come or not, and I think that is because design has by and large caught up. But there will be instances where the design has been delayed, and that will be in terms of where consultants have perhaps furloughed their own staff, and if that's the case, well then that is that is a breach of contract, and that there will be consequences for that in terms of delivery. Or where the employer, the contractor, have furloughed staff, and that is perhaps where there's a lack of access to information in order to perform your services, so an active impediment, and that may give entitlement under the contract time and money or money. And then a lack of access to site on the basis that all sites were closed. There was a lack of access, and I think consultants by and large took a view that they should not be sending their operatives to site. Just as an aside, one of the things we looked at early on in the lockdown period was what would happen if you forced your staff to go on site, and they were unfortunate enough to get ill, had long-term health effects perhaps. At that time we didn't know whether there were long-term health effects, but we sort of postulated that there might be. What would happen if a member of staff got sick, went on site, and they could prove that they were part of a cluster that was probably got infected on site? How would the insurance react? We asked a friendly firm of insurers to advise on that, and they said that statutory insurance would probably pay out, but there is a right under the contract to recover those monies from your firm. And we wrote articles and gave advice on that at the time, that you should not be forcing staff on site in circumstances where you cannot ensure that they're going to be safe. So lack of access to site is perhaps a relevant issue as well, and it may give you entitlement to time or money. Possible routes to recover more time and money, and I'm going to just look at the NEC professional services contract in a wee bit more detail, but just more generally, if we can have the next slide, please. Some thoughts are, if your appointment has no force majeure clause, then it offers no relief in terms of an force majeure event, i.e. COVID, and then in effect you are in breach if you don't complete your services by the completion date. If there is a force majeure clause, you still have to take all reasonable steps to avoid or mitigate that event. Frustration was one of the words we saw used, legal words we saw used a lot in articles at the start of lockdown. It's unlikely that your contract has been frustrated because of COVID. and that's because that operates where the services have become legally or physically impossible, or the circumstances have rendered performance radically different to originally envisaged, and that it brings it to an end. So I'm not aware of anybody successfully arguing frustration to date. There may be circumstances where the contracts were frustrated, but it's most, I would imagine, will not be. And obviously there is an obligation to mitigate loss and frustration scenarios and enforce majeure. So by and large, I think if you don't have a force majeure clause, and a lot of contracts didn't have them, we haven't seen, by the way, a force majeure event in the last 20 years genuinely. So a lot of this is new law, and it's being developed since March. So if you don't have a force majeure clause in your contract, then technically you're not entitled to relief. So can I have the next slide, please? So looking at that more particularly in terms of if you're having discussions with your employer under the NEC professional services contract, I just wanted to touch on that because I know that is becoming a more popular form of appointment. These are the key compensation events that you would be considering if you were seeking relief or seeking time or money under your appointment. And that's where the employer gives an instruction changing the scope, and the scope includes a constraint on how you're going to provide your services. The employer, others do not work within the time shown in the accepted program within the conditions, and that's where you don't get the information you need to carry out your design. The employer doesn't provide access to a person, place, or thing stated in the contract, so you don't get access to site. The employer gives an instruction to stop or not to stop, and that is something that we did see was I thought some employers did issue instructions. They thought it was in the best interest of safety to shut down the site and instructing work to stop, but that would be a compensation event. And finally, force majeure, and that's at clause 11, subsection 11 from memory under the professional services contract. An event that stops or delays the consultant completing the services at all, or by the date on the accepted program, which neither party could prevent, and the experienced consultant would not have been expected to price for the risk, as there's such a small chance of it occurring. And I have paraphrased it there, but that is what the force majeure clause is under NEC. Interestingly, if you take the concept that test is applied at the date of entering into the contract, it worked. It would be adopted in all probability in March and the period afterwards, but any contracts you've entered into after the start of this year, well, we all now know about COVID and we know about the consequences, so it's all foreseeable. So COVID will not, on new appointments, be a force majeure. Can I have the next slide, please? Compensation events have to be notified within 8 weeks of being aware of the event, or no time under money, and subject to an obligation to mitigate, and that's 63.7. You only get cost and time reasonably incurred. And I've seen arguments raised by, I think from memory, it was Scottish Water, in terms of some of the projects I was working on, where they're saying to the contractors that they had an obligation to furlough staff, and that probably is right as an act of mitigation. It's not a cost that you've reasonably incurred unless you can justify not having furloughed your staff. X2 is change in law. We were constantly getting asked about changes in law, and that's from the 21st of April. That's the regulation 4 applying social distancing. That really only applies, it really only impacts once you come back on site. So that's the consequences of social distancing, for example. And we've seen it being used to claim that we are being disrupted, where you're being disrupted in the performance of your services. And also seen arguments developed around trying to argue for travel costs, because you can't travel with the same number of people in the vehicles as before, perhaps of less relevance to consultants, but it might be in some instances. Next slide, please. So all of those relate to the previous slides, relate to you claiming more time and more money from your employer. As I say, there haven't been many disputes we've seen yet in relation to that. Probably where I see the bigger risk is in the role of contract administrator. And why do I see it? And it's because, in my opinion, and from what I've seen in projects at the moment, contract administrators are at risk of not performing their services properly. What are the key risks? Did you issue instructions to close the site without the client instructions? Why? And that's because it's only becoming apparent now that that has got money consequences in terms of compensation events. And so employers perhaps thought it was the best thing to do to shut down the site and order the instruction, but did they realize that they were going to have to pay? And if you think of it, that would include the cost of perhaps retaining staff in that period. Although you would argue that it's subject to the obligation to mitigate and that people should have been furloughed if possible. Perhaps incorrect assessments of extension of time and loss and expense. And I say this because if you're sitting here today as a contract administrator and someone is saying, I want what is a contractor's entitlement, you should have been looking at any prior delays prior to lockdown, and then looking at step one. So as you went into lockdown, what was the period of culpable delay? 2, what was the impact of the lockdown on that culpable delay? So perhaps some design got caught up, but by and large the work stopped. So most projects probably came out of lockdown with the same period of culpable delay as they went in. And then what's the impact since in terms of disruption? If you don't do that assessment, you're not doing it properly. And not advising of the risks of wrap-up deals to clients to get the works restarted. Why do I say that? Is because I'm seeing these sorts of deals being done where the employer is perhaps taking some of the risk and levering in monies into the project, additional monies that perhaps aren't due under the contract. The contractor is agreeing to an earlier completion date than perhaps he was projecting based on disruption. And all of that is a risk. All of that is the giving away of a right to liquidated damages and the application of further monies by the employer in circumstances where there's a representation from the contractor perhaps that there's going to be 30% disruption going forward. If it turns out there's no disruption going forward, that employer could turn around to the contract administrator at some point and say, why did you assess that new completion date? Why did you do that? Because you had no evidence at the time that there was going to be at that level of disruption. So there's almost a wee bit too much of a rush in some instances to try and get the project up and running again. But the biggest, what's being forgotten is that any sort of a wrap-up deal involving future disruption, is to the benefit of the contractor and not necessarily wholly to the benefit of the employer. So instructions. Clients, as I say, are now complaining about that liability to pay loss and expense that wouldn't have been required to had no instruction been issued. And do you have a record of the client approval if you issued it? Assessments of time, as I say, what is the status of the contract at site closure? Was a culpable delay? COVID-19 is in all probability a force majeure, although we have no legal authority on that, and it's likely to be the dominant cause of delay during lockdown. And a change in law is not justification for being off-site if there's no force majeure clause under the contract. Can we have the next slide, please? Assessments of time. What was the extent of the culpable delay upon return to site? Did the contractor mitigate delay upon remobilization? And disruption is difficult to prove. I have never in my career had a clear disruption case proven, either where I was advancing it or challenging it. And that is because it is difficult to produce evidence of the extent of disruption. So how can you be satisfied in making an assessment of future disruption without any evidence of progress or a measured mile to assess it against? I just want to touch briefly on, because if you are a contract administrator, if you're an engineer being in that role and you are being challenged, well, if we look at some of the contracts and see what do they say, well, this is what do they say about the obligations of the contractor, and what should you be considering whenever you're making your assessment. So under SPCC, save for the conditions expressly provide otherwise, the employer shall give an extension of time by fixing such later date as the completion date for the works or section as he estimates to be fair and reasonable. But the contractor equally has to use best endeavours to prevent delay the progress of the works, howsoever caused, and to prevent the completion of the works being delayed or further delayed beyond the completion date. So the contractor's got an obligation to use best endeavours, and therefore you as contract administrator have to assess whether or not he's done that. And if he hasn't, he doesn't get the time. Next slide, please. So what are the key relevant events you're going to be considering? Force majeure, which is an unforeseen event at the inception of the contract, construction, and in the exercise of a statutory power by the government which directly affects execution of the works. So force majeure is COVID, instruction is if an instruction is issued, and the third one is the regulation 4.1, which impacts on disruption. And the proviso is that whenever we looked at best endeavours, we spent a fair bit of time at the start of lockdown looking at this obligation, and all you could find was scraps of case law and a whole spectrum of cases that describe what best endeavours is. Keating, which is one of the standard construction books, said it's thought that the proviso does not contemplate the expenditure of substantial sums of money. Not particularly helpful, because whenever you're considering who's got responsibility going back on site, i.e. who has to pay for the welfare, is that the contractor's obligation or not? That's not all that helpful. So what we did is we dug a bit deeper, and could I have the next slide, please? So best endeavours, what is it? It sits somewhere between mitigation and acceleration. Mitigation, slowing down a delay; acceleration, speeding up to overtake it. And the three qualifications: the steps have to be capable of producing the desired results, so there must be a worthwhile output in proportion to the measures being implemented. It's not clear what level of reasonable cost the contractor will be under an obligation to incur in order to meet its best endeavours obligations, and the court's probably going to decide that by reference to the cost of the work's been undertaken. So you wouldn't need to spend £1 million to recover to prevent £500,000 worth of delay. And health and safety considerations override all. You cannot force anyone to put people into unsafe conditions. Factors, you assess it against a background where we're still reviewing the legislation every 3 weeks. And I think it's a balance between the time saved, cost incurred, and the prelims saved. So if you're a contract administrator, you have to know what best endeavours obligations are in order to be able to say that you have considered it, to be able to justify any awards that you've made further down the line if they are subject to challenge. And I would say that's one of the features, I think, of this COVID pandemic has been hindsight. Everybody is an expert in hindsight. Why did you leave site? Why did you not stay on site? These are all going to be looked through with a prism of hindsight. So in particular, looking at this, does the calculation justify shift working or the use of the expenditure of non-productive overtime? Next slide, please. So that's, from memory, I think that's probably all I've said on SBCC, NEC, time and money. You've got the clause 6119 under the construction contract, which is the force majeure clause. And there's lots of arguments around that, but it must affect the ability to complete by the completion date. And it's just pretty much it's the same clause as you would have under your appointment. And I think there's no doubt, although there isn't case law on it just yet, that COVID-19 is a force majeure and an active prevention for the purposes of this contract. X2 is the change in law, and that's the change in law is regulation 4.1 that we discussed. That's the application of the 2-metre social distancing rule for the purposes of disruption, and that's from the 21st of April. So there are other arguments that have been advanced that you would have to consider as a contract administrator. The fact that the project manager should have been issuing an instruction to stop works, we've seen that argued. There's the change in the works information, that this was a change in the works information, but that doesn't generally work. We don't agree with that because the works information is the same, the site's the same. You can just put fewer people onto the site. Acceleration, that's been argued, but that's only relevant if it's been instructed. And fundamentally, it's a balance between the time saved, cost incurred, and prelim saved. So NEC, it's active prevention under 19 and this X2 are the two main ones that you're going to have to consider. Everything else so far has just been arguments have been advanced, but they're not just as strong in terms of routes to recovery for the contractor. It's for the project manager to consider. Next slide, please. 63.7 is this obligation to mitigate loss reasonably. This is the reasonably incurred cost, and that's the argument around should you be furloughing your staff. And then the last elements are, I don't need to dwell on those, but those are just what exactly it is you must prove in order to be able to get payment for a compensation event, and it depends upon which of the options under the main contract. That's a wee bit too detailed for the purposes of this talk, but it's just fair to say that it's not that there is different assessments have to be made under different forms of contract as a contract administrator. And assumptions is an important one, because we discussed before the assessment of projected disruption. How do you deal with that under NEC? Well, under NEC, you should make an assumption, and then you can go back and you can revisit that assumption at a later date. And if you revise your assumption, i.e. there is more or less disruption than you had assessed, or you had anticipated, then that itself becomes a compensation event. Next slide, please. Disruption, again, I think I've probably covered that in sufficient detail, but is productivity been impacted more by the workspace or welfare? If it's welfare, then who's got a liability to provide it? Is it a relevant event? And that may change in time depending on the work activity. The work activity is ongoing on site at the time. Is it a layers disruption caused by COVID or other contractors? And this is something that we were projecting that if you flood the site with all your subcontractors, bringing them back on site at one time, well, then there's an argument that the subcontractors could say, well, actually, I've not been delayed by COVID or a force majeure. I'm being delayed by the poor sequencing of the works or resequencing of the works by the employer. And how to assess the extent of any disruption? Well, that's the key test. I have had a project where I was employed to try and prove disruption that had not happened, and I helped devise forms. We helped train the staff. And the fundamental difficulty is that it seems to go against human nature to turn up on site and to do 3 hours worth of work in 3 hours and then stop and then sign a bit of paper and go home. What's more likely to happen is you'll take 7 hours to do the 3 hours worth of work. You'll sign a bit of paper and you've just proven the fact that there's no disruption that day. And that is why disruption is difficult to prove, and that's why you should not assess it lightly as the contract administrator, because it is a potential liability. If you have potential liability for the client and consequences for you if you get it wrong. So therefore, based on the above, any amendments to the contracts or awards of money and completion dates must be carefully documented. It has been a commercial compromise, and that's important for you as contract administrator, that this is a commercial decision being taken by the client and not based on an assessment made by you. And I think that's perhaps the last slide. Just next slide, please. It is. And so just to summarize, there are two main ways in which COVID impacts. One is your entitlement to time and money directly, and secondly, in your role as contract administrator. I think the latter is the one that presents risks for the future. It'll be interesting to see whether or not those actually materialize. But I make these statements based on knowledge of actual projects at the moment and the way in which projects are being administered. I do believe that represents a risk, and that is why I've gone through that in a bit of detail, so that you can hopefully see that at some point in time, the assessments you make today could be challenged in the future. Can you justify them? And have you got the records to prove it? Thank you very much.
Okay, thank you very much, Manus. Again, that was very thorough, and sure there's a lot for people to think about, whether particularly taking the job of contract administrator. We don't have a huge number of questions in, so feel free to pop some in, but first one here is to do with fire exclusions. So I'll maybe let you jump into this one, Brian, but the question is, should we be advising clients about fire exclusions in relation to contracts previously signed?
It's a very, very good question. There's no definitive yes or no answer. What we've been advising our clients is that you're not duty bound to say to your clients that we've now got a fire safety exclusion written into our policy. Typically what we do, you'll get a verification of cover document from your broker, which will have obviously a list of the limits of indemnity and any exclusions and endorsements, which a fire safety exclusion is typically written as a special endorsement. Therefore, at that time, if you supply that to your clients and then they ask the question about fire safety exclusion, then you can explain a little bit more. You know, we've been supplying letters to our clients about the fire safety cover, about the market in general, how this is becoming more and more market standard. So I don't think it will come as a surprise to any of your clients that you now might have a fire safety exclusion written into your policy. So I would suggest, I said there's no yes or no, it's a commercial decision that you might want to take to inform your clients, but I would certainly suggest having a word with your broker about that and the best course of action moving forward, you know, on that particular subject.
Okay, thanks, Brian. A question I have, which well, unless you can pick it up, Brian, but I should probably both of you can have a view. You touched a wee bit on some of the areas of work, swimming pools, for example, that are viewed as high risk. But what are the insurers particularly interested in? Obviously, we've had a couple of reservoirs that have almost failed in the last 6 years and some other areas, but what do you think the insurance market perceives as the more risky areas, and if people are working in those areas may struggle a bit more? And I suppose again, when it comes to the claim side of things, your experience on that as well, Manus.
Yeah, I'll start on that. It's kind of difficult. Each insurer's got their own kind of prerogative when it comes to swimming pools and basements. You know, you ask one insurer what their definition is of a basement, and you ask another insurer, and they've got two completely different answers. You know, some say anything that's below ground level. Some say if it's got 2 walls below ground level, 3 walls, or completely subterranean. So it's kind of difficult to say for certain. The main areas of concern are obviously when excavating either under current properties to either extend an existing basement, particularly in the London southeast of England. But most insurers are nervous about sort of any basement work. Swimming pools, again, if you're only involved in, say, the design of the structure which contains the swimming pool, you know, far less of a risk there. It's when you're actually involved in the technical design of the swimming pool. You know, same with basements, waterproofing and stuff like that. If you're actually involved in the specification of that, then it's far more riskier than, for example, if your end client actually fully appoints a specialist to do that on their behalf. So there's no, it's difficult to say for 100% certain. I don't like to give a woolly response, Stephen, but that's unfortunately I said each insurer's got their own prerogative on that.
Okay, you got any thoughts to add on to that, Manus, in terms of things you've seen, or?
Nothing you would apply generally, because I've had swimming pool disputes. Generally, it's been to do with the specification of the waterproof membrane for it and the appropriateness of that, and usually it's caught up as much in the workmanship as anything else. As a design is usually an element of both causes the failure. The basement excavations, I've been to a talk with technical directors from a major insurer across the UK, and that whole basement excavation seems to be a feature more of the London market, where property prices are so high that it's worthwhile incurring the cost of basement excavations where you're going down 1 and 2 floors below, and they didn't seem to be quite as prominent in other parts of the UK. So I haven't experienced it.
Okay. Another question, I suppose, again for both of you. Obviously, most people on the webinar today will be predominantly having home working in terms of their firms. Is there any specific processes or arrangements that we need to consider beyond that, what we would normally do in relation to risk for having staff that are not necessarily being as supervised as they potentially would be? Is there any sort of general tips or thoughts as to whether it's all be generally covered one way or another?
I think it's just being, as prudent and as you possibly can in respect of, trying to constantly communicate with your staff. Working from home, doing, periodic Zoom calls with everybody, stuff like that. There's no real, because it's relatively fresh still. Everybody working from home. I said insurers are asking for COVID-19 questionnaires, which typically ask about, furloughed staff, working from home arrangements, how you're communicating with staff, etc. So I don't think, again, there's nothing definitive that I could provide anyway, Stephen. It's just really being as extra vigilant as you possibly can when it comes to supervising your staff is what I would suggest. Don't know if Manus has got anything to add to that.
Yeah, it's about processes and communication. From a claims perspective, it doesn't really matter why your design is negligent. It's just, that's the story as to how you prevent it from happening again, is the fact that if it was done as a result of a risk that came out of home working. But how would you anticipate that? Well, all you can do is anticipate it, communicate as much as possible, and make sure you've got the checks and processes in place, formalized, so that nothing can be sent out unless it's been signed off by the appropriate person. And the other thing is obviously just watching for your staff's general well-being. It is, you can see even in our own staff times when people do get tired and when it does get them down a bit, it's more difficult to keep motivated. What we do actually as a team is we have a 9 o'clock call every morning. Why? Because and the team want that because it signifies their start for the day. It gives just a marker that it's the starter gun. Right, that's us. We're working now, and everyone switches into work mode, which I think is helpful. But mental well-being, the major issue as well. But all of that it's just good practices. It's just thinking about it and putting the processes in place.
Okay, thanks for that. And one last question, really, for yourself, Manus. You obviously mentioned the impact of decisions. Just in conversation with a number of contractors, they've noted a failure by clients and administrators to actually make decisions on a number of projects. Is there specific risks to contract administrators if they kick the can down the road and not actually make decisions?
It's interesting. We had a panel review for a major UK contractor, and we were with the Scottish arm of the panel, and all the projects for this well-known name across the whole of the UK. This is about a month ago. They'd only got one decision on an extension of time, and there seemed to be a holding back, waiting to see what happened generally across all major projects. But it was just starting to move at that time. So yeah, the delay is if you don't make your assessment. The risk is if you don't make your assessment, then you end up in a dispute because, especially projects where their liquidated damages running, they need the relief. The contractor needs to know that if they're going to get an extension of time, are they exposed to damages? You put them into a position where they've got to fight the employer to get an assessment made if you won't make it. So yeah, making no assessment is pretty much, it's not clever. It also, from a contractor's perspective, it makes you as the contract administrator look as if you're just siding with the employer. You're in their pocket, even if you're not. Trying to lean in the employer's favor, it just looks bad. It's a pandemic. The contract's there, apply it. That's your job.
Good, okay. Well, this is approaching time there anyway, so thanks to everybody for listening. Hopefully you've found the webinar interesting and answered some of the questions you have. Thanks to Manus and Brian for all your time. And then just again a reminder that the webinar has been recorded and the link will be sent through later today, and in due course it will also be available via the AC website. So thank you very much and enjoy the rest of your day, and we'll see you next time.
Thank you, everyone.
Thank you.